The cross-border payments have or will increase from $150 trillion in 2017 to over $250 trillion by 2027. And these payments are underpinned by the technology of SWIFT. And today with us, I have the SWIFT experts, Nazir Ahmed, who is the head of SWIFT UK and Ireland, Emma Saxton, who is the business product manager in SWIFT, Stephen Lindsay, who is the business lead, and Russell Saunders, who is ex-managing director of Lloyds Banking Group. He was also on the board director of SWIFT, and currently he is senior independent director for iFast Global Bank. Russell has a large experience in the payments industry. In this mind, I will now pass the microphone to Stephen, who will give us a little bit of introduction to SWIFT and the ISO standards. SWIFT. Stephen, over to you.
Thank you very much. Yeah, thank you very much, Yvonne. And thank you also to the Institute of Directors for inviting us to speak to you this evening and giving us this opportunity to share what we do. I'm sure many of you will be familiar with SWIFT, or will have heard of us. Of course, we're the messaging service that underpins, amongst other things, the sort of correspondent banking network. So provides the messaging and other standards and other services that enable cross-border payments to all the many trillions of dollars and other value that is moved around the world every day over SWIFT that Yvonne was just referring to. But this evening, we'd like to speak to you about something which is a little bit bigger than that, which is, the fact that the international payment system is changing and evolving quite rapidly at the moment. And it's perhaps something that hasn't been terribly forward in terms of the way that it's been communicated, but it's really quite an important and interesting evolution in the way that payments work. So I'm going to just provide a little bit of background on that. And what we mean by the new language of payments. And then I'm going to invite Russell, Nasir, and Emma to comment on this topic from their various different perspectives. In terms of their roles, first of all in the payments business, but also in making some of these evolutions happen, right? Because they all have played a very critical role in doing that. So I'm going to talk a little bit about that. I have a couple of slides to show, so I'm going to put those up. And then happy to take questions as we go, if you put them in the chat, or I think that there's also a period for Q&A foreseen at the end, so we can also sort of pick up any questions that you might have at the end as well. But let me first start by putting up some slides. Just one moment.
Good evening, Stephen. I do apologise. I'm just trying to ensure that we can spotlight you for everyone's benefit. One moment, please.
Okay.
So this should be working for everyone. Thank you very much, Stephen. Thank you for your patience.
No problem at all. So did everybody see the slides okay?
Yep, that's fine.
You do. Okay, very good. So the global payment system, I think it's worth elaborating because people may not be familiar with it. It's made up of many thousands of interconnected components. When we talk about components, elements, institutions, market players, there are of course banks, but there are payment service providers, there are fintechs, there are market infrastructures. There are systems like real-time gross settlement systems, which is an example of a market infrastructure. In the UK, we have CHAPS, and we have Target2 in Europe, Fedwire and CHIPS in the US, and so on. We also have instant payment systems like the UK's FPS. We have automated clearing houses like BAC. So we have a whole variety of different technologies that somehow have to work together, particularly in the context of cross-border payments, when money is moving from one place to another, this value is moving. And some of these systems have existed for decades, right? Some of them are brand new, but some of them have go back literally to the 60s and to the 70s. Many of those older ones evolved in a purely domestic markets. So that was before they were being incorporated into the global payment system. And the consequence of that is that there's a very confusing mishmash, if you like, of data standards that are in use in the global payment system. So yeah, I mean, really, some of them very old, and it works. These things all do connect together. They've evolved over time, over decades, and you can send a payment that originates as a cross-border and then goes into chips, for example, and gets paid out in dollars and so on. And that all works pretty well, but it's very complicated and it's expensive and it can be inefficient. And it's also true that these older data standards that some of these older systems were designed to use were designed at a time when computing power and bandwidth and storage are extremely expensive commodities. And therefore, everything had to be done to minimize their use. You wanted to get as much payment value into your message as you possibly could. And if that meant excluding anything extraneous in terms of data, then that was a good thing, because processing these messages and sending them around was costing fortunes. So that meant that, and it continues to mean in some instances, that getting useful data beyond the very sort of basics of what's required to make a payment can be very difficult. Yeah, it can be difficult to get information through the system. Yes, you can get the value, but anything else, anything that relates to the various parties that are involved in the payment, or to what the payment is for in the general case, the sort of, what invoice am I paying and so on. All of that information is very difficult to get through. Now, since the time of some of those standards were developed, the world has changed entirely, right? Computing resources, bandwidth, storage, they're almost limitless and they're incredibly cheap. So we don't worry about those things anymore. And certainly we wouldn't design standards around those kinds of constraints. But a few things have made life a lot more complicated, of course. The first is that there's orders of magnitude more volume in terms of transactions and also a value that's moving around the world in sort of globalized economy. Secondly, there's very strict regulations on transaction screening, and those are intended to prevent criminal activities, terrorist financing, that kind of things. And of course, as many of you will know, there are very big fines for banks that fail to comply with those regulations, particularly for cross-border. And now that's increasingly happening at domestic or the currency zone level as well. And then finally, customer expectations for efficiency and automation are far more demanding than they used to be. Businesses operate 24/7. They want to manage their cash flow in real time. They want to use liquidity efficiently and so on. So they really need more information about their payments, ideally traveling with their payments, than they can get using this mishmash of old standards. So to address these concerns, there's been probably a bit of an stretch, but nevertheless to say there's been a bit of a quiet revolution going on in the payments industry. And more of those components that I talked about, where their market infrastructures, banks, cross-border, have started to adopt a new ISO 20022 language, if you like, for payments, a new data model for payments, in favor of and replacing those domestic or proprietary standards that were used in the past. So ISO 20022 is not a new standard. It's been around for many years. It's an open standard. It's created under the auspices of the ISO organization, the International Organization for Standardization. So it's international. It is open in the sense that anybody who wants to use that standard is free to do so. There's no license that they have to pay. It's not controlled by a particular commercial entity. Indeed, by definition, it's controlled by its users. That's the way that ISO standards are created. They're created under the auspices of ISO, with ISO's IP policies, but by the users, but with open licenses. So that's how it works. And it's existed in one form or another for something like 20 years. So it's really not new. But I think that it's important to understand that the kind of transformation that we're talking about, where you're replacing legacy structures and formats that have evolved over decades in something as complex and interconnected as the global payment system, is really quite a big lift, right? So this is something that's taking a long time. The first instance of the ISO 22 standard being used really sort of in anger, if you like, was in the Single Euro Payments Area, SEPA, and that began in 2008 with credit transfers, and in 2009 that was extended to direct debit instruments. So that's how low value payments typically are made in the Eurozone. And it's a standard that's rooted in some of the first wave web technologies from the early 2000s. So XML, for example, schemas, these kind of languages. But that doesn't really matter. Really, I think people get a bit fixated on the technology, but it doesn't really matter. What matters is that it allows much richer information to be included with payments. That's the whole sort of the core and the core value proposition, if you like, of ISO 20022. Much richer, much more structured and granular information that's included with payments, and that can really help in the way that those payments are processed and understood, both by the banks, but to a large extent also, maybe more importantly, by the users of the payment systems. That's the people who make payments and the people that receive them, typically corporations. It's highly important, for example, that for banks, when they're screening a payment, as they have to do, of course, for sanctions screening purposes, that they're able to identify where that payment is going through with some accuracy. Something like 5% of payments today get stuck somewhere on their journey because it's impossible for the bank to determine whether the beneficiary of that payment is a legitimate party or somebody who appears on a list, right? The estimates vary. 5% seems to be one that comes up quite often. And that's where a lot of the cost in payments operations today lies, because these are the payments that typically are taken out of the automated handling and require manual processing. And of course, it's when you have manual steps in the process, first of all, you get unhappy customers because it slows things down. It also brings a lot of cost to the processing of the payment. So if we can do something about that, and ISO 20022 sets out to do exactly that by providing much more structured information about the parties involved in the payment, then you can certainly improve both the user experience and the cost of payments. But it's also incredibly useful for payment system users as well. For example, if I get a payment I've sent an invoice and I get a payment back, what I want to know is not just what the amount is that's hitting my account, but also what it is that you're paying me for. If I send you that invoice, which line item you're paying for? Maybe you're using a credit note. Maybe some of the items that I sent to you were damaged and you don't want to pay for those. So all of that kind of information is going to help me reconcile, help me, get a reconciled cash position, which is what I really want as a business. And if I don't have that information, then that's a very hit and miss business with quite a lot of manual processing steps. So one of the huge benefits of ISO 20022 is it includes very rich structures that can be used to convey this information between those who are ordering payments and those who are receiving them, so that they can automate a lot more of the processes than you do today. So really trying to make the point that it's the data that really matters, not the technology. And ISO 20022 data structures have been used for all sorts of different use cases and with lots of different technologies as well. So they can be used with APIs, and they are, if you look at the APIs that have been exposed by banks for open banking, for example, or in PSD2, you'll find that those structures are based on ISO 20022 standards. They're also exchanged in CBDC transactions and so on. So there's nothing specific to the technology really. What we're talking about is a common business model for payments for the industry from end to end. And when I say end to end, that's probably quite an important point to continue with. The take up of ISO 20022 is accelerating really quite rapidly at the moment. So even if the technology is not new and the standard's not so new, what really is new is that the ISO 20022 is becoming the global standards for payments, and it's now powering most of the world's instant payment systems, whether that be from Sweden or to Singapore, Europe, the US, Australia. All the instant payment systems that have been rolled out in those countries are using ISO 20022. It's also been adopted by a large number of domestic high-value RTGS systems. I think India was the very first RTGS, real-time gross settlement, high-value payment system to implement ISO 20022. Switzerland came soon afterwards. But recently we've seen South Africa, Malaysia, a number of other countries, and a couple of months ago, the Eurozone's high-value systems both switched to ISO 20022 over a single weekend. So that was a big, it's called a big bang migration. All the participants in both of those systems, all the participating banks. On the Friday, they were using the legacy standard, but as of the following Monday, they were all using ISO 20022. The same weekend, we saw Canada, Australia, and New Zealand also switching on ISO 20022. In the UK, the CHAP system is going to make that same switch next month in June. And in the course of the next couple of years, the two US high-value systems will also switch. So the clearinghouse, TCH, moves in 2024, and FedWire moves in 2025. And then really to complete that picture, and also in March of this year, so to coincide with the Eurozone and those other markets moving, SWIFT, we began the migration of cross-border payments traffic. So the messages that are sent between banks, typically cross-border. And right now, we're currently seeing about 15% of cross-border payments are being encoded in ISO 20022, but that's expected to reach 100% by the end of 2025. So we're giving our community time to make the adjustment because it's a big change, and we've implemented transaction translation in the flow of the messages to ensure that everybody stays interoperable during this, what we call the coexistence period between now and the end of 2025. And because of that, we've started to see already quite a nice uptick in the use of ISO 20022. And I think that this represents a really huge lift, both for SWIFT and for the wider community. And Russell will provide some perspective on that later, particularly from a UK perspective. But the effort and investment required to get to that point were immense, and they continue to be immense because that we're not done yet. As I say, we're only on 15%, but that is going to grow. I think the important point to make though is that when I say completing the picture, it's because so many, if not most, cross-border payments either start or end in a domestic system. So, and also because ISO 20022 is already established quite well and growing in the corporate to bank space. So what we have, or what we're moving rapidly towards, is a setup where payment transaction throughout its entire life cycle, from initiation by a corporate through their ERP system, through to the bank to another bank, that bank through a market infrastructure, and so on, all the way to the end, all using this same common standard. So quite the difference from the, as I say, the sort of the mismatch that's characterized payments up until now. And that's great because it means that all this rich data, which is going to drive all this automation and other benefits, is now able to be exchanged from end to end. So, and this information is not, yes, it's going to improve efficiency, but it has a lot more value. When you couple that information that's going to be sort of traveling with payments, with the latest analytics technology, with machine learning, with AI and these other things, the value that can be extracted from that information for users of the payment system is immense. So we see banks, PSPs, fintechs, all looking, first of all, they're interested, of course, in the efficiency improvements that ISO 20022 promises, but also what they can do with that data to understand their customers better and to serve them better. So coming up after Russell, Nasir is going to talk a little bit about how SWIFT's customers, that's the banks, are looking forward to the benefits of that common standard. And Emma will explain the new technology that SWIFT is planning to deploy. And it's a great moment to be having this conversation because we're going to just switch this thing on this weekend. So it's a technology called the Transaction Manager. And its purpose is, amongst other things, to accelerate these benefits, to make sure that all this rich data that we expect to enter the system is preserved from end to end and provides, all the kind of value that it can all the way to the end of the payments chain. So that was what I had to say. I'll be very, very happy at this point to take questions if there are any. I'm going to look in the chat. I'm going to have to stop my presentation now in order to be able to do that and get back to you. Hang on just a moment.
Shall I suggest we just do maybe one or two questions and leave the rest till the end, because it might be better. We just want to make sure that we fit in within our time. So if that's okay, we'll save the questions till the end. Okay. Thank you very much, Stephen, for the explanation, for the introduction to SWIFT. It was very interesting. Russell, so you have been very close to the actions of payments for a very long time, being on the SWIFT board. You've been a member of the ISO 22022 governing body, and also you have contributed to the UK initiatives on the standards and modernizations of payments. Please tell us why you're excited about it and what's happening and why.
Well, thank you, Yvonne, and thank you, Stephen. I love the way Stephen, describes things. This transaction manager was one of the most exciting new developments of technology, which will completely enable the delivery of some of the ISO benefits. But just call it transaction manager because it's that simple. Well, this is a huge project, right? Everyone knows that. I became involved in 2016 when I first joined the SWIFT board and came across ISO as one of those legacy sort of discussions because it had been considered by the global community on a number of occasions and rejected on a number of occasions. And I'll come back to that in a minute as to why it was rejected. But your question, Yvonne, how am I feeling about it, has put me out in a bit of a cold sweat because this thing has is associated with so many ups and downs, a lot of emotion, a lot of energy extended, because you're trying to mobilize a global project across multiple market infrastructure providers, many different types of payment standards, etc. And it's not easy to get everyone as excited as I've been. But that said, we've sort of started a journey. We've definitely passed the point of no return, and that does really excite me. There will be some issues, and I'm sure colleagues on the webinar will raise some of those a bit later. But I'd like to just give a bit more of the background because I think it's important that we recognise exactly what has been achieved here. So we'd first like to start with acknowledging the incredible achievement of the SWIFT team, so Stephen and the completely extended team within SWIFT. The Payments Market Practice Group, which is a group of highly technical payments experts who have been oversighting the whole technical side of the standards, been rewriting rules and regulations to make sure this works across every jurisdiction. And we've had huge support by the central ISO organisation, which you hear about that, but this is they set standards from everything from child seats in cars to nuclear power stations and payments. And that's a huge institution. It's a bit painful to be part of it, but it serves its purpose. Also, the modernisers within the global banks. This would not have happened if there's not a new generation of forward-thinking payment experts who recognise the benefits and were prepared to stand up to our investment committees to ensure that we got the right energy behind this. And something that did help those people, the support of CPMI, the Committee of Payments Market Infrastructures, which has got all the central banks in there, including the Bank of England, and the likes of Victoria Cleland and John Jackson at the Bank of England, have been consistently demanding that the global institutions, as part of CPMI, removed friction, structured data, and enabled the new modern payments infrastructures to work better. So this has been a real success, a testament of collaboration, vision, and technical expertise. And I've congratulated a lot of people. I've missed many more, so I apologise for that. But I'm sure they'll message me that later on. But Stephen, you'll remember that the ISO journey, as I've just described, has not always been smooth. No. Our colleagues, I know, on the webinar, will be able to describe the good, the bad, and the ugly of ISO. The resistance that we had back in 2016 as the ISO project had been initiated and stalled on a number of occasions for very good reasons, by the way. When I joined the SWIFT board in 2016, we had been recovering from the global financial crisis, dealing with consequences of Bangladesh heist, so-called. Dozens of global firms were struggling to fix their sanctions breaches. And finally, there was a cadre of senior management within the global transaction banks that was still sitting on revenue pools that they didn't want to let go of, and were benefiting from some of the delays and the transfers of multiple challenges, as Stephen described. It's hard to, when you own a P&L, trust me, it's hard to give up. But the global bankers wanted, what the last thing the global bankers wanted was another expensive, complex program. So it was against that background that we needed to get things going. And one of the things to do when you're really struggling to get global support is to not deal in emotion, not deal in argument, but deal in facts. And it was a complete fact that standardization and structuring of data across a standard would have avoided many of the challenges that the global markets had faced before. If you had structured data, some of the financial crisis issues would not have happened. It would have been easier to reconcile. The delays in closing down the difficulties of cross-border transfers would have been much easier to deal with. But thankfully, we were not deterred by that argument. I can deal with arguments on facts, very hard to deal on emotion. And the other things that we had in our favour as we moved into this sponsoring of this new global initiatives is that we were fortunate enough to have a new cadre of informed Swift board members who became the global sponsor of the ISO journey. For the first time, we had the US, we had Europe, we had the UK, we had Asia, all beginning to talk about the benefits from a factual, knowledgeable point of view. At the same time, we had a new Swift executive under the leadership of Javier, who were equipped technology-wise and knowledge-wise to run a program this size. And you had the payments expertise who were collaborating across all of the initiatives to make sure that we got the standards right. That was a lot of iterative reviews, a lot of hard work, but as long as you got consensus, then that was good enough to devise the standards. And finally, as I said earlier, we had the global market infrastructures beginning to regulate or threaten regulation if we did not improve the global connectivity of payments. So yes, Yvonne, how am I feeling? I'm excited that we're about to revolutionise global payments, trade, and ISO is the enabler. Me personally, I'm proud to have been part of that journey, honoured to be part of that journey, but also pleased to be at the stage of my career where I can support a new generation of innovators and leaders to exploit this opportunity and develop the solutions that the market requires, but without having any accountability.
Thank you very much, Russell. Thank you very much. Nazir, so in your role, you speak to a lot of banks. And so I just want to find out, and please tell our audience, how are they approaching the ISO 20022? Is this a compliance problem? Is it an opportunity? And how are they preparing their customers for the changes? What are the benefits?
Yeah, thanks, Yvonne, and thanks for having me on. I share Russell's excitement when it comes to the proliferation of ISO 20022 and the move and the migration that the industry is making at the moment. I think, first of all, to understand where customers stand with respect to their journeys on ISO 20022, we need to take a bit of a step back and acknowledge, and I know both Russell and Stephen have alluded to this in their remarks, is that this is actually a very complex journey. It's a significant undertaking that the industry has to make. And there's a lot of resource that's been spent in terms of time and budget resource over the last 4 to 5 years just to get technologically ready for the bare minimum, which is to be able to receive ISO 20022 as part of the migration that we have pushed for cross-border payments. But I think the next step of the journey is going to be perhaps even more complex, because in order for the industry to be able to reap the benefits of the move to ISO 20022. We have to view it as more than just a simple change in messaging syntax. It's actually a real foundation for the future of payments, right? And both Russell and Stephen mentioned this, and totally agree with what Russell ended with over there, which is we need to find ways in which to be able to utilize the value that ISO 20022 represents to build new innovation for the industry, right? And that is really going to be the challenge that customers are going to have to resolve. So most of my conversations are actually about this. Okay, we've started the journey in March 2023. What's the next step that we need to take? And I think Swift is going to have to play another crucial role in terms of bringing the key stakeholders from the industry together to try and brainstorm on, okay, we know what some of the benefits are going to be, and Russell was talking about them earlier about compliance benefits. We know the benefits of structured data. We know that having better data quality is a good thing, but how do we take that to the next level and actually produce things that introduce real innovation for the industry, right? That's going to be the next challenge. And that actually has been the key thing that customers have been asking me about. And it's something that we've already started work on. Um, we will be issuing a paper soon, which will be a foundational paper on what are some of the things that people can think about with regards to improving their own value propositions as businesses by utilizing the power of ISO 20022. So I think that's the key thing that people are looking at the moment. And there's a couple of steps that they have to take at the start of this journey, right? First is to better understand where we can go so we know what the destination is. But we're going to have to do some preparation work as we get there. So the first part of the journey is essentially being technically ready, and people have spent a lot of time and resource doing that already. The second bit is, and I'm going to steal an analogy that Stephen uses all the time, which is we've built the highway, but we now need to build the on ramps to get the data onto that highway, and that's essentially the first part of that journey. The rich data has to come from somewhere, right? And it comes from the underlying customer. The end customer is where that data is going to come from. So I think it's not only us as an industry that needs to be sold on the value proposition of ISO. We need to bring along the end customer on that journey as well, because they're going to have a crucial role to play. So the first part of that journey is are banks and financial institutions building the capabilities in their channels to be able to capture that richer data from their end customers? And the answer is yes, that's what they're thinking about doing. And that's the conversation that I have with them a lot as well. But then second to that is, how do we articulate in a clear way to that end customer about why this change is going to be transformational, not just for the financial services industry, but for them as an end customer and for their business, right? That I think is the next big challenge. After everybody agrees on how do we innovate and what can we get to, the big challenge is also going to be to bring the end customers along on that journey. And that's sort of the thing that people are spending the most time to think about. And we have some initial thoughts on that in terms of how we can articulate the value proposition to all participants, whether it be us in the industry or the end customers. Maybe I can share some of those thoughts, and I won't go into too much detail because I'm conscious of time. But I think apart from talking about the efficiency benefits, the compliance benefits, the benefits that the structure brings, I think one of the key elements that we should articulate more is the future proofing that ISO 20022 brings as a data model. Stephen described it as a data dictionary, as a data model. And that's what it should be looked at as, not as a standard as such or a syntax. It is actually a data dictionary, a data model that is usable across different technologies and in different syntaxes. And I think so one of the key roles that ISO 20022 is going to play in the future is the fact that it will allow the industry to be able to build more scalable APIs, for example, utilizing this underlying data model. But also what's more exciting is what it potentially has the capability of doing with regards to encouraging interoperability between what exists today and newly developed platforms that might be based on other technologies, DLT or the like. So this data model has huge potential in terms of future proofing for the industry. So that's something that I think customers that I speak to are becoming more and more attuned to. And I think they should focus a lot on this element of it as a future state benefit that ISO 20022 could bring. I think some of the other end customer benefits relate to the better management of working capital for the end corporate customer. One of the things that ISO 20022 brings is the ability to put in place structured remittance data, and also the ability to add invoices, for example, onto an ISO 20022 message. And that will enable financial institutions to provide auto reconciliation services to corporates. And I know it sounds like a very niche thing, but I think the kind of benefits that would bring to the end customer and those who are in corporate treasuries will tell you that it solves a huge problem. The other thing that ISO 20022 will allow is the development of new services. So ISO 20022 has a functionality built in within it for on behalf of payments. We don't have that concept in legacy at the moment, but the kind of services that can be built upon having that functionality within the transaction message and the transaction envelope, I think opens up huge possibilities for financial services providers in terms of efficiency, in terms of being able to offer services that are not so easily offerable today in a standardized and secure way. So I think the future term benefits, the end customer benefits that I mentioned, and the utilization of new service propositions that come with ISO 20022 are absolutely key and need to be talked about more and more. And I'm excited to be part of this discussion with the industry about how they will iterate, how they will innovate utilizing ISO 20022 going forward. But yeah, thank you.
Lovely. Thank you very much for sharing that and answering any questions, Nazir. I have a question now for Emma. So Emma, what are the major challenges facing the cross-border payments today? And also, is the ISO 20022 the answer, or is it just a building block? And what is Swift community doing to address the challenges? Can you tell us, please?
I can definitely try to and try not to repeat too much what my colleagues have already said in their wonderful answers. So there are a number of challenges recognised across the industry in the context of cross-border payments today, especially so as market participants are arguably increasingly aware of how important efficient cross-border payments are to international commerce, and as underlying customers' expectations actually continue to rise, as Stephen mentioned earlier. And these underlying customer expectations are frequently focused on a demand for greater speed, for simplicity, and for security from their payment providers. And coupled with this is an implicit need for frictionless, transparent, and a predictable payments experience as well. As many of you on the call are probably aware, the G20 has actually released a roadmap for improving international transactions. And this has highlighted 4 perceived challenges of high cost, low speed, limited access, and insufficient transparency, which we also hear echoed across a number of industry meetings and have done for quite a few years. And ISO 20022 is directly aligned as a essential pillar of a more inclusive and efficient payments ecosystem, which I think is also reflecting a lot of the work that the BIS and the CPMI are doing, as well as I'm sure a number of people on this call today. And at the heart of many of these challenges actually is really fragmentation, either of technology, processes, coverage, or requirements. So, fragmentation of operating hours is an obvious challenge in a cross-border context, with offline hours of settlement systems and participants playing a role in overall processing speed, as well as time zone differences, which can significantly reduce the number of overlapping operating hours amongst banks and market infrastructures. And related to this, you then also have the concomitant impact of trapped liquidity, which can in turn drive up costs, which leads into one of the other challenge pillars that we mentioned. And this complexity arising from fragmentation of compliance checks as well and regulatory requirements is very well recognised, including in areas like sanction screening, anti-money laundering, capital controls, requests for documentations, and even balance of payments reporting. We also see that payments sent with incorrect, incomplete, missing, or truncated data can add to these challenges, either by resulting in false positives in screening, requiring additional manual inquiries and investigations to retrieve additional data in order to process. And there are challenges arising simply from standards and formats varying by jurisdiction and message network, from differences in character sets that are supported, which can necessitate translation, and even from different market understandings, actually, of even honorifics and abbreviations, which can result in delays, costs for technology and staff, as well as holding back the potential for automation, which is something we've talked about a lot today as being one of the benefits of ISO 2022. And we even see that legacy, unsurprisingly, actually, for most people, plays a major role in many of these challenges, whether that is legacy of technology platforms with a reliance on batch processing or lack of real-time monitoring and notifications, which can result in slower settlement times, or legacy formats of payment messages, which over time have ended up being built up with regional and local idiosyncrasies. There's a lot of creativity in terms of implementations that require translation and create bottlenecks that could cause inefficiencies and increase costs. And as we've sort of talked about already a little bit on this call today, ISO 2022, it really lays a critical foundation for addressing many of these challenges, starting with that support of richer, better quality data than we've ever seen before in our cross-border payment space, and providing those transaction parties with the access to more detail and actionable insights. And in turn, this better information ensures that businesses can deploy their resources as efficiently and effectively as possible, whether that's through enhanced fraud detection, more targeted sanction screening, or actually greater personalization could also be a potential with all of this. And rich data will also enable global connectivity and compatibility with virtual payment systems worldwide, including the real-time payment systems that support cross-border payments, as Stephen mentioned earlier. And it will hopefully start to negate the need for manual requests for additional information, which is highlighted as a key pain point, and as well allow for routing and rerouting if needed to be as effective as possible with straight-through processing over more corridors, and supporting this idea of optionality that we hear a lot in the industry as well, about making sure you can make that payment in the smartest, fastest, most efficient way without having to manually make any decisions there. Perhaps the most important benefit of ISO 2022, though, is as a standardized format, it creates a common language for international payments globally. But that said, even with a common language, you can get regional variations and colloquializations. I know this particularly in languages themselves, because I'm learning Spanish at the moment, and it never ceases to surprise me how much it varies between countries. And the same exactly can be said for financial standards. And so as a key part of ensuring adherence to best practice, the Swift community are moving from point-to-point messaging to transaction management. As Stephen mentioned earlier, actually this weekend, we go live with our transaction manager. And a core component of this is the application of business validations and data integrity rules, which will help us to drive best practice and actually consistent implementation of standards, which I think is incredibly important to help overcome many of the challenges of fragmentation and interoperability. Amongst other benefits, it's actually also going to put the business transaction at the center and ensure that no data is lost along the way, which will enable banks to improve their compliance processes, as we mentioned, with more targeted controls, reducing the number of false positives compared to the volume seen today with non-structured data. It also helps to provide interoperability between customers using different data formats and messaging channels so that they can adopt new connectivity channels and services actually at their own pace. And that also removes, to a certain extent, the requirement for mass adoption, which is also a key challenge that we see with many new ideas and initiatives to try and address the challenges of cross-border payments. And then if we look more widely at what else the Swift community are doing to address these cross-border payment challenges, on the one hand, we also have a focus on speed, predictability, and transparency, whether that is developing propositions to ensure that payers can be confident on the amount and currency that will reach their payee, to building on the foundations of global cross-border payments tracking, which provides traceability and transparency, and is actually in the process at the moment of being evolved to also cover return of funds tracking, so that the community actually have a holistic view and understanding of their cross-border payments, helping them deliver actionable insights and identify sources of friction no matter the outcome of their payment. After all, we recognise that actually often the biggest challenge from an underlying customer perspective, and the moment they realise we have all of these challenges, is actually when there is a problem with their payments. And what they really need is to be equipped to know, firstly, that there has been a problem, and then to be given enough information to actually take action to resolve both in the moment, but to make sure that they avoid repeating the same mistakes in the future. And that ties into also the fact that we are also focusing on removing friction, both by preventing issues from occurring in the first place and also streamlining investigations. So today we support global pre-validation of accounts, supporting insights on whether accounts are, for instance, known, open, able to receive funds, and supporting name matching, as well as validating the payments data required. So for instance, whether a purpose payment code is actually required, and if so, which ones are supported in the market that you're either sending to or from. And that will help to minimize the risk of delays to payments and mean that underlying customers can get work done at pace, as well as helping to make sure that payments are more secure. So really starting to answer some of those challenges we mentioned right at the beginning. We also know that this is going to help us to really accelerate taking full advantage of the rich capabilities of ISO 2022. We all know the maxim, rubbish in, rubbish out. Pre-validation will actually support driving data quality alongside reporting and benchmarking that we can start to centrally produce to help the community to raise the bar and achieve greater automation. And then on the flip side, in complement to pre-validation and recognizing that sadly inquiries and investigations will always be part of our lives, there is a focus on reducing payment friction by leveraging ISO 2022, the new inquiries and investigations messages, in combination with transaction management capabilities to allow us to drive smarter, more efficient investigation processes and communications amongst the community. So really leveraging ISO 2022 is a key foundational step that's underpinning all of these capabilities and will continue to underpin their evolution over time to drive maximized data quality, data integrity, and transparency benefits for the SWIFT community, which will help us to address the challenges facing cross-border payments today. But moreover, as an adaptable global standard, it's going to ensure that the entire community can continue to make and receive transactions and to speak this common language with aligned implementation, even as new technologies and settlement options develop. And as Nasir and Stephen mentioned earlier, this really actually means that not only are we helping the SWIFT community to answer the challenges of today and the existing legacy challenges, but we're also helping to ensure that we can answer the challenges of cross-border payments in the future as well.
Thank you very much, Emma. Thank you, Russell. Thank you, Nazir, and thank you, Stephen. We definitely learned a lot today about all the challenges, the benefits, and how huge undertaking this program of work has been. We will be opening now the floor for questions. But ahead of this call, I have received few questions from our participants. So I'm going to start with the questions that have already arrived prior to the call. And the first question is for Stephen. Many banks are using transaction services. What support can SWIFT provide to migrate smaller banks away from their empty messages to ISO?
Okay, great question. Thank you very much for that one, Yvonne, or whoever submitted it. So today in the SWIFT network, we provide a translation capability built right in. So if I'm an ISO 22 sender and I want to send you ISO, which I do, I want to send ISO to everybody in my network because I have all this good stuff. I want to send it as widely as I can. Then the receiving bank has the possibility to receive that plus a translation into the legacy format. And that's something that the network supports. So the component that Emma mentioned as well, this thing called Transaction Manager, that ensures that even if that receiving bank isn't able to process the complete data set, then they can forward that information in the legacy format, and it will be effectively replayed as ISO 22 before it reaches the end. So we can protect the data end to end. So actually quite a lot of what you need as a small institution, it's already there. It's baked into the network. You don't really have to do anything. And what our sort of advice would be, a plea almost would be to the small to medium institutions is don't waste time on internal translations and other kind of ad hoc tools and techniques for just trying to comply with ISO 20022. Take the time that you have now until the end of 2025 to use that same money to invest in doing ISO properly. Take your time. We'll continue to translate for you in the meantime. And then when you're ready, switch to ISO 20022 in a much more holistic and wholehearted way. So, I mean, the short answer is don't translate. We'll do that. You get your hands on ISO 20022 to do it properly.
Okay, thank you, Stephen. So I'm just going to be answering, sort of reading the messages as they come here on the chat. The first question is sort of from Argentina. I had a presentation slides will be available. I think we can share them, Stephen, right? The ones you shared. Yes. So that's yes. Next question is from Pavan. I understand that the local schemes in different countries are adopting different version of the ISO 20022. And if my understanding is correct, do you see that causing any interoperability issues in the long run, especially for processing cross-border payments? I'm not sure who the question is to, but any of you, if you can answer.
I'll have a go if that's okay. It's true, yes, there are, and Emma alluded to it, that there are slightly different dialects in use in different communities. Now, some of that is to do with the fact that the business environment in those communities is different. They have different needs and requirements. And ISO 20022 is a standard that you can adapt to your own needs. But indeed, when those market infrastructures in those communities join up to the global payment system, join up to correspondent banking, there can be some differences. And I think the first thing to say is it's not nearly as bad as it was when they had entirely different and differently evolved and developed standards. It's way better than it was before. Also, that there is going to be some effort that's going to be required from those communities who are adopting the standard and from the cross-border community to remain aligned. That doesn't come for free. That's going to require some coordination and some effort and some give and take. But it doesn't, I don't believe, fundamentally change the overall proposition, which is, a common standard end to end, which is always going to be beat, as a hodgepodge of different standards. Which we've had in the past.
Okay, thank you, Stephen. Next question is from Jonathan. Hopefully, I'm reading that right. One associates the use of SWIFT with banks. Can it be used by corporates, and if so, how?
I'll probably take that one. It's a quick answer, and the answer is we have about 2,000 corporate customers that operate on SWIFT. SWIFT is a communications platform. And there are 2,000 plus corporates that utilize it to be able to communicate with their banks and financial institutions. So the short answer is yes. The long answer we can perhaps discuss offline in terms of how and what's required for it.
Thank you, Nizi. The next question is from Andrew. Andrew says he really enjoyed hearing about the data dictionary concept and the mention of DLT. How long and to what extent does SWIFT believe it will take to become popularity used? And what steps to ensure understanding amongst financial institutions?
Yeah. I mean, perhaps I'll take a first stab at it, and Stephen, if you want to add, or Emma or Russell, if you want to add to it, please do. But I think first and foremost, making sure that the concept of ISO 20022 as a data dictionary and a data model must permeate throughout the industry. I think a lot of traditional players perhaps are familiar with that concept, but it's something that we need to talk more about. In terms of when will people start to utilize the ISO 20022 in a way that enables the community to leverage its value? I think the first step is to get to November 2025, whereby ISO 20022 is going to be the de facto standard for communication over SWIFT for payments. At that point, we expect a large proportion of the industry to be ISO native in their back offices. And at that point, I would expect that there would be a lot more of a firm idea about use cases and how to utilize the value of ISO 222 for innovation. So I think in the next 3 to 5 years, we should see, the real use of and the real leveraging of the value of the power that ISO 222 brings for the community. But I don't know if anybody else wants to pitch in on that answer.
Yeah, I'll give it a shot, Nasir, just to say, yeah, it's going to take time. I think that, the benefits are going to require to be reached. They're going to require that, that the rich and the structured data is go into the system in the first place. And that's going to take time. It's going to take education. I think once people start to see the benefits, they'll want them and they'll want more of them. So my expectation is that as these things start to become known and start to become used, and we have this end-to-end chain for the major currencies in place, which is happening right now, as we've already discussed, that people will start to see the value. And once they start to see the value, they'll want more. So, it's a virtuous circle eventually that, the more that people get to see it, get to like it, get to use it, the more they're going to demand it of their service providers, their banks, and their market infrastructures, and that that will over time start a snowball effect. But it's not going to be something that happens instantly. This system is large, it's complicated. The value is going to be realized by different kinds of players in different markets at different times. But so we shouldn't kid ourselves that it's going to be an overnight journey. But at the same time, I think that now that we have these fundamental building blocks in place, with more to come with sterling and dollar in the coming couple of years, that's really going to be what accelerates the progress.
Thank you, Stephen. Thank you, Nasir. And the next question is from Yadu. Why should developing countries use SWIFT network given the associated risks?
I'm gonna give a very diplomatic answer about this, but happy to have a conversation with you, Yadu, separately. But what I would say is SWIFT is a global cooperative, and this is absolutely the case. It's a global cooperative. We're a messaging platform for the entire industry. We are an industry utility owned by our members, and we absolutely stand by that. And regardless of where you're from, we think the value proposition that we bring to the community resonates regardless of the region. So that's what I will say to that.
Okay, thank you. I can see that we have two people that raised the hand. James, you have your hand up. You are currently on mute. I'm not sure whether we can unmute you, but if you have a question, perhaps you can type it. And also, Adrian, you have your question up, I guess. Okay, please go ahead, answer the question. We can't. Oh, there we are.
That was me. Yeah. Hi, folks. Adrian Furness here. I work at Lloyd's Banking Group. So, first couple of thanks. Thanks for an extremely informative webinar. It's been excellent. And I'd echo something Russell said earlier on, which is a thank you. We're a payments community, and an awful lot of work has gone into this over the years. So it's been fabulous. Thank you. I'm interested in the panel's views on what are the biggest threats that we're kind of managing and mitigating to the success of the rollout over the next couple of years. We've talked about some of the longer term challenges, some of the opportunities that exist, and they're great. But what are the panel's views on the threats we're facing in the nearer term, and are we doing enough to mitigate them? That's my question. Thank you.
And the question was to whom?
To the whole panel, but I guess
okay.
every panelist covered threats and opportunities to a certain extent. So interested in all views if they have them.
Who wants to go first?
I'll have a little stab. I'm going to throw it to Emma because I'm sure she has a different take on it. I think, well, first and foremost, we've as Emma described, actually, and Naz as well, that we built the rails, right? We built the highway, but the bit that's missing is the on-ramp. It is this notion that you've got to get the transaction at its source, which means from the corporate, from the customer, from the user of the payment system and not from the bank. And I think that position has been up until now, well, that's the bank's business, that's their relationship between the bank and the corporate customer. So we should leave that to them and just provide the interbank piece. But I think but for me, that's in a sense the biggest threat, that part just doesn't happen, right? That last mile or first mile, if you like, of getting the transaction in the right format into the system never materializes. So we've got all these lovely rich data structures and all the rest of it, but they're being populated with the same data that we had 10 years ago. That I think would be, having given all the effort that's gone into this so far, a tragedy, but also something which remains a genuine risk. And that's why I think that in terms of from a Swift standpoint, we're trying to turn our attention to focus on that particular part of the problem and say we clearly don't want to get in between banks and their customers. We don't want to disintermediate. That's not our role. We're owned by the banks. We're cooperative. We're certainly not going to compete with them. But how can we help with that first mile? So I think that the risk is that doesn't happen, but it's a risk that we're very much focused on mitigating. And that's something that there's actually a board paper that's gone out as part of this cycle, which starts to address that question. But Emma, what's your take on this one?
I mean, I would absolutely agree that I think that's one of the key challenges that we're going to face to make sure that we actually do make the most from this rich data opportunity. And having come from a bank perspective, I've seen how difficult it can be to improve that data quality and to work with your customers and to upgrade your digital channels. So it shouldn't be underestimated the amount of effort that this is going to require from the banks, particularly in a macroeconomic environment where getting funding for an awful lot of these changes can be problematic and could take quite some time, particularly for those who've gone for a minimum compliance with the ISO 2022 switchover, rather than, as Stephen mentioned earlier, really embodying the spirit and exactly everything that can come from this. So there's a little bit of a hearts and minds for the underlying customers, plus some of the smaller institutions as well. And I think in addition to that, we've also got to consistently monitor to make sure that we can provide that interoperability as well. So to the question earlier about different ISO 2022 standards, implementations, that potential for regional and local idiosyncrasies to emerge is something that as a community we also need to guard against and to try and ensure does not happen, so we don't repeat some of the mistakes of the past with other formats.
Thank you, Emma. Russell, is there anything you'd like to add?
Yeah, I think it's a really good question, and Emma and Stephen answered it very well. I tend to look at these things at more at the macro level, and there's clearly going to be some challenges at that macro level to Swift, the Swift community. There'll be new innovations. There'll be CBDCs that different firms and technologies will try and claim that space. I would welcome all those, but I would also say that what that external pressure creates is greater innovation from the incumbent, i.e. Swift. So we're already seeing how trials for CBDCs within the Swift network can be achieved. Atomic settlement will be achieved via the transaction manager. Reduction in liquidity will be, which is a huge issue on cross-border transactions and global acquisitions, as an example. Liquidity mopped up in those is huge, and that will all be managed more effectively with a transaction manager. So I think the pressure and the vocal criticism from the market will force Swift and other technology providers to step up and help. And that technology community that you see every year in Cybos has got huge capability now. It's now been refreshed with fintechs, and they will find solutions to some of these problems. I'm absolutely convinced of that.
Lovely. Thank you, Russell. We have another questions from James, who question is rather long. So let me read that.
Yeah.
So I'm reading that. Do we have any real use case stories of the power of ISO data sets, such as receipt data? Rather than how much and where can the word to large coffees or a pair of levies be transported into my fintech app. Other than Swift, other payments platform considering like SEPA. What are the barriers for this happening? And I don't know whether you can all see that, but it's a long question.
Yeah.
If so, the benefits of the...
This is James, sorry.
Yeah, go ahead.
Apologies for the long-winded question, but for me, this is James Evan. I work for MUFG, and I was I still am the GFCD ISO EMEA lead. For me, I've just been listening to what's going on in the industry. I think a lot of firms, it's no degradation of systems. Make sure that they can ingest MX. There's a lot of transposing from MX to MT. But I think, the future state is, let's look at the power of this data and what it can really do in terms of both the commercial and the compliance benefits. And I think, I've done a lot of research into this, and I think ISO in itself, if you can have receipt data that it can be, transposed into your fintech, for example. So you go shopping, rather than going for your receipt, it's already within your Revolut or your Monzo. Brilliant. So that's the commercial benefits, and it'll also, negate a lot of the costs of, doing expenses and bookkeeping and all that sort of stuff. But the the compliance benefits would be, I'll give you a scenario. So, Stephen Paddock, who, the Las Vegas shooter, he went to Walmart and he stockpiled a lot of weapons from Walmart. Okay. Obviously a horrendous attack. If the FBI would have been able to see right in real time what he was stockpiling from Walmart, right, it wasn't groceries, but it was in fact ammunition. And I think the power of this data set could actually profoundly prevent crimes if there's that kind of surveillance. I guess the danger is, will we get into a surveillance state? But it's looking at that data set to be transposed into your. It should banks, ultimately know what you're buying when you're at the till, and is that actually possible? That's my key question.
And the question is to anyone particular? James?
Well, I guess it's to the Swift community, really.
Okay. Who wants to answer that?
It's fairly radical, but it's possible.
Yeah, I think that, we're honestly a bit uncomfortable talking about the sort of the surveillance aspects of it, but it's certainly true that today, when banks screen international payments, these are the types of things that they look for, right? They look for entities, individuals who are on watch lists. They look for information in remittance data and so on. But that's today a very hit and miss process, because the data is unstructured, the meaning of the data is uncertain. So although global banks are required by regulation to look at payments in this way before they process them, the process is, well, leads to, as we said earlier, leads to a lot of false positives, a lot of payments that are pulled out of the automation that could have gone straight through, and potentially also payments that should have been stopped that make it because the data was not sufficiently clear or unambiguous. So I think that yeah, we do see benefits in even today's compliance processing, not having to sort of project new requirements in terms of the regulation, but even complying with the data regulation will be made, if ISO is implemented correctly, will be made both much more efficient and also much more effective.
I'm hearing what you're saying, but essentially what I'm saying is what have you bought? What have you purchased? So ISO obviously presents that opportunity, right, to know exactly what you've purchased. So the commercial benefits are there, but from a supervised industry such as the financial services industry, which is obviously has to demonstrate its integrity, surely that the power of those data sets could provide some elements of surveillance to prevent things, or better still, do some, real time action, if that makes sense, because TMS is retrospective, it's not real time. I think that's the key argument. If we're bringing compliance into this, what is the power of this data set? How can it be exploited?
I think what I would say to that is, in principle, there is richer data, there is more structure, and as you say, there will be more elements of data that are included in payments. So in principle, utilizing that data to be able to form a view on patterns and things like that is absolutely going to be a reality, yes. But what use cases are going to win out, I think that remains to be seen. And that's essentially what I was referring to before. What you're talking about is one of many ideas that potentially could be out there of the power of utilizing this enhanced data set and the increased structure that we're going to see with ISO 20022. But I think it remains to be seen how we utilize it as an industry and what actually becomes commonplace in terms of use. So in principle, absolutely agree. I think, the ability to be able to utilize that data in a way that can give us visibility into patterns and things like that are absolutely going to be there and available. How we use it as an industry and what becomes commonplace, I think is yet to be seen.
Okay. Thank you, Nazir. Thank you, Stephen. I have a question for Emma now. Emma, as we know, Swift is all about instant and frictionless. So how does the ISO help the journey? This question from one of the audience.
Okay, so very much for our strategy of instant and frictionless, which I think all of us have sort of alluded to a little bit earlier in terms of what we're looking at, ISO 20022 is one of the foundational aspects of helping us to get to an instant and frictionless experience for the Swift community. And that's really in combination with Transaction Manager that goes live and all the orchestration capabilities that is going to be able to support, alongside the protection of data and that end-to-end data integrity view that I think would actually even feed into the conversation we were having previously as well, where, for instance, we would lock structure remittance information so no one can change it mid-flight as well. And it also goes in combination with GPI tracking. And those three pillars together are what will allow us to then pursue the instant and frictionless goals with a lot more speed and also with a much greater coverage than we would be able to otherwise.
Lovely. Thank you very much, Emma. Looks like we don't have any more questions. So I would like to, first of all, thank everyone who has attended that call. Thank you very much for all the Swift expert. We definitely learned a lot today about the different challenges, the benefits, the complication. It is really a big subject. And so if any of the attendees have any more questions but have not managed or are too shy to ask here, please feel free to message me directly or David, and we will be able to answer your questions directly, perhaps via email. And on this note, once again, thank you very much. I just would like to say that the IoD Finance and FinTech Group welcomes everyone to join us and follow us on our LinkedIn page. We have a number of events that are coming up. Our next event is on the 15th of June, and this is FinTech in Africa. And this is a very limited VIP offer for anyone who's got interest in setting up businesses in Africa. And then next one will be also our summer party on 10th of July. So please look at our LinkedIn page, follow us. And once again, thank you very much. And I wish you all a very good evening. Thank you.
Thank you.
Thanks, everyone.
Thanks, everyone.
Thank you, everyone. Cheers. Thank
Bye.
you.
Bye-bye.